Good morning and welcome to the market forecast. Today is Monday, June the 21st. First. I'm John Hoagland. Thanks for trusting me with your time. As always, we're going to be looking for accurate context, good risk management, and patience in our trading today. Welcome back. It's Monday and 5 full weeks of opportunities ahead of us. Starting this morning, there's no major economic releases, but we're going to take a look and see at what we have coming for the week. Let's see here. We have not much today, of course. Tomorrow we have Redbook and existing home sales. Wednesday, PMI composite flash, new home sales, and EIA petroleum status report. Thursday, some durable goods orders, some GDP information, international trade in goods, and jobless claims, all on Thursday as usual. We also have the EIA nat gas report on Thursday, and we have on Friday personal income and outlays and the Michigan consumer sentiment, of course. So we've got some more important eco numbers as the week goes on, and then finishing up the week relatively quiet. So, as far as the things are shaping up for us this morning and for this week, stocks are trying to rebound after a relatively tough week last week. The NASDAQ was the only index that eked out a higher close on for the week on Friday. S&Ps, the Dow, and the Russell all closed the week lower. Today, the ECB Lagarde is speaking a couple of times today, a couple of U.S. talking Feds later on, and Powell is set to testify tomorrow at 1 p.m. Central Time. Traders are, I know I am cheering now that the equity rollover is over. Crude oil rollover ends largely tomorrow. We can get back down to seeing some dependable information from volume and open interest for at least the next couple of months here in the equities, and a couple 3 weeks in crude oil. Crude oil traders and investors pondering what a new Iranian president will mean to U.S. policy in the region there. As always, crude has been kind of moving higher over time, and with inflationary measures and everything like that, I'm not expecting any major pullbacks. But then again, news can always screw things up for us. So, as always, make sure you like, share, comment, question, feedback, and heckling are always welcome here at the Market Forecast. Make sure you check the VIX this morning here. The VIX this morning was down just a little bit, still above 20 at 2037. Dollar index pretty steady at 92.11, and the 10-year yield dipping below 1.4 has kind of returned back above that 1.4 to 1.46%. As always, got to say good morning to everybody. Tone, first one in the room, you win the prize. Richie, Brian, Theo, good morning. James, Bill, Drew, good to see you. Murph, good morning. Top steppers, great to be here on this beautiful Monday morning. Hope you all had a great week, as we hope you all do as well. Caesar, Zorain, Mike, the Chef Magallanes, Laura, Vici, Jim, Greg, Tim, my brother Rick, good to see you this morning. Vince, good to see you. Rob T, Angelina, Tanya, good morning. Hey, JD's back. Good to see you, JD. I'm looking forward to hearing about your trip. Joshua, good to see you. And Fanny, good morning, everyone. If this is your first trip to the Market Forecast, make sure you say hello. Let us know you're here. Jason, Buenos Monday, everybody. And we always appreciate you checking in and saying hello. And we're going to take a look at the charts here now. Things were nice and stable up until I started the forecast. Then I lost the chart. So let me get those back up here again, and we will get through this. And there we go. Off to the daily in crude oil. Let's check it out. All right, so inflation, demand, supply. There's plenty of upside pressures on crude oil. Obviously, the market has been rambling higher over time. I'm calling this a upside digestion area. Market's not going to just continually go one direction. It's going to pull back and range a little bit. Our auctioneer is pandering a little bit here. The context and structure is still strong. It's the end of rollover. The market does tend to be a little bit range bound during rollover. That's going to end, I believe, the last trading day for July is tomorrow. So we'll be ending rollover very soon and back to depending on volume and open interest a little bit more with our decision making. We lost 27,000 in open interest on Friday, largely going to be rollover related. It was an inside day in extended trading hours. Today we're just kind of hanging right where we finished on Friday. We'll take a look here and we'll see what we see here in the 30-minute. Hollywood Day Trader, it's good to see you. It was nice talking to you on Friday as well. I have an interview with Hollywood Trader on Friday. That's going to be up on our YouTube channel at some point this week. It's a really good interview. Thank you again, Hollywood, for doing that with us. And I'm looking forward to watching it again myself. I haven't had the opportunity to really go through it, and it's a really good interview. Thank you, Hollywood. All right. Here's the 30-minute in crude. We're pretty centrally located in the weekly range, okay? The purple lines. We got a weekly kickoff high up here, pretty much last week's high. We got a weekly kickoff low down here, 67.60, well below last week's low. I think it's going to take that for this market to truly change market state to the downside. That's why that's so far down there. If we can take out the high, I think we can easily start to move higher in the upward market state that we're currently in. What does it mean for us today? Well, we didn't really have any overnight inventory when the market opened up. Settlement is right here, 71.29, and we're in the middle of the range from Friday. Now, it was a pretty good P-shaped profile on Friday indicating short covering. Short covering takes buying power out of the market. It seems to make sense that the market is coming back to test lower levels. We've got Thursday's point of control and settlement price. Settlement price from Friday is here. A couple of little targets down here. We've got the low from Friday, the low from Thursday, which is the low for the week. But with the fact that we're in range and in value, tells me there's a pretty decent possibility that we're going to find better trade location as the day goes on. And as always, I'm very patient on Mondays. Typically, not my best trading days. Knowing that, I'm not going to be pushed into getting too involved too early. Here's the S&Ps. We see our nice pullback last week. We've got, there go the charts. Hang on one second. I don't know why this happens. Just from time to time, seemingly randomly, a little gremlin gets into these computers and causes this to happen, and I do apologize. Should be back up here right now. There we go. So, when you look at this, since April, we've been sort of range-bound here. We have not necessarily been all that directional. We've got lots of range boxes. They're all inside and overlapping each other. It seems as though this market was looking for some sort of a pullback or a little bit more time to even out inventory before picking its next direction. Makes sense that would happen during rollover. We're in short time frame control for now. Take a look at the 30-minute chart. All right. Last week's high, last week's low, testing down below it. Weekly kickoff high 42.58 to the upside, pretty much last week's high. Weekly kickoff low 40.73 down here. Settlement from yesterday, or Friday, I should say, 41.53.50. Now, the thing that happened on Friday was we had a late spike. We had the market try and hold up for the better part of the day, but we suspected through Delta that we saw some longer time frame sellers in this market, which would have been getting the short time frame long throughout the day. And on a Friday, the short time frame doesn't want to go home with a position, so they created this late spike to the downside. Now, that late spike to the downside, the base of it is right around 41.61. We are holding above that level. When we open in or below a late spike, it marks acceptance of lower pricing. We open above a late spike, it's rejecting lower pricing. However, the market is really in the area of value from Friday, where it spent most of its time point of control here right around 41.72.50 or 75, the fairest price of the day, and that's right where we're trading right now. Do we have some longs in the market from overnight activity? Well, with settlement down here at 41.53.5, we might be holding a little bit of overnight inventory to the long side, but I'm not looking for any major adjustment, and especially because we are back in value and range from Friday. This is the comfortable area for this market. Two-sided trade is happening at will here, and it's not the best trade place for daytime frame traders to be looking for opportunities. So, as usual, I'm going to be trying to stay patient, looking for opportunities against day trading information to look for better trade locations as the day goes on. We've got, plenty of gap here. We've got naked point of control up here. We've got, everything pretty much sewn up as far as naked points of control to the downside here. As this was the low from last week, and here's our low for this week so far, but so far also rejecting last week's low. Stay patient again. Things will become more clear as I think the day goes on. And the NASDAQ held up better than all of the other U.S. equities last week. It's more of an upside digestion than a pullback, I would say. We are pretty centrally located inside of last week's range and the weekly kickoff range, which still remains the same as last week. Nothing really changed. And let's see what we see on the 30-minute chart here. Again, kind of just centrally located. I'm thinking we're in short time frame control, and there go the charts. My apologies. Get these back up as quickly as possible. I had a procedure that I believed was working for us, but it doesn't seem to be today. All right. On to the 30-minute here for the NASDAQ. Last week's high, last week's low, centrally located, as we mentioned. I'm going to spread this out a little bit so we can see what we're looking at in the daytime frame here. We know we're pretty centrally located between last week's high and low and weekly kickoff high and low. Settlement is right here, 14.035. And where are we? We're in range. We're in value. I'm staying patient. It's Monday, no economic news. The market is largely in balance, basically trading near point of control, that fairest price of the day. Two-sided trade continues to occur in the same place it did last week. I'm going to try and stay patient and wait for some of the extremes of the day to establish themselves. The initial balance, perhaps our overnight high and overnight low might offer some opportunities. But again, I'm going to try and stay very patient. And gold. Gold is going to be an interesting product for us this week. We had a $120 move to the downside last week. Open interest overall fell during this move to the downside. It didn't increase. This isn't new business and new sellers coming in to move this market lower. This is longs getting out. So it's not all that healthy for the auction process. Now we did bring in more volume, but only on certain days. Friday we lost 8,700 in open interest right at the low here. The last week's low is supportive today for our extended trading hours session. So I'm a little bit concerned that this push to the downside has created a situation where if this is longs getting out, that's taking selling power away from the marketplace. We've been losing open interest. It's not like we're getting a whole bunch of new shorts in this market, but this move to the downside certainly could use a little relief back to the upside, especially after taking all those sellers out of the marketplace with all of that open interest dropping. We see volume drop down here. I'm going to be looking for a pretty decent sized change in direction here. All right, so here's the 30-minute chart. So here's part of our big move to the downside. Weekly kickoff high is 1860. The low 1757. Last week's low just above that. Where are we now? Well, we've got lots of gaps. We've got lots of naked points of control above the marketplace. Anything that's happening behind us down here was quite a while ago. The low from last week and the weekly kickoff low are a couple of reference levels that I'll be focusing on if given the opportunity to look for executions down in those levels. Settlement from Friday, 1769 even. And then the market kind of put in a late spike after the close. We're rejecting that late spike, even though it happened after the close, the technical close of gold. It still looks like a late spike to me. We're rejecting it. We're in range. We're in value. Maybe we're a little bit long in open overnight inventory with settlement still remaining lower. But here we are again, in range, in value, at the point of control. I do not want to execute anything here. I need to see something change before I'm going to start trading, because I don't want to trade where everybody's trading. Two-sided trade is occurring very easily inside range. Inside value. I'm going to look for the opportunity to trade at established or soon to be established extremes for the day session. Overnight high, overnight low. Interesting. How about last week's low? Also interesting. In the middle here, I got to stay patient. I don't want to do anything. Oh, there goes the charts again. My apologies. Oh, this is just awful. I don't know how long that was off there, so we'll take a look. Okay, so here we go. Inside value at point of control. No real reason to rush into anything. Two-sided trade is occurring freely here. I don't want to trade there. I want to trade it at an extreme where I'm going to find out relatively quickly how, if I'm going to be wrong or if I've got a possibility to be right. Don't want to trade where everybody wants to trade. Charts should be back now, guys. Thank you. I try and keep an eye on that. It got past me for a minute there. All right, so again, in range, in value, Monday, not my best trading day. Don't want to trade where everybody's trading. Stay patient. Look for opportunities at extremes. Overnight high and overnight low would be a good place to start. Euro, as is the gold. Aside from expiration, the difference between gold and the euro is this move downside has increased open interest. Again, aside from expiration. That open interest has increased on the way down, telling us there's money coming into the short side. Maybe that money is going to end up too short, and we're going to see a move back to the downside. But when there's money and volume coming in an auction tends to go in that direction. Last week's low, supportive last night, supportive so far today. Going to be, of course, we have to watch the dollar. But this downside auction is presenting with greater health than the downside auction in gold because of the increase in open interest. We know it just rolled over. We know there was an expiration. So I think the test is really going to be last week's low. And then we've got, of course, this swing low, which is the weekly kickoff low. Take a look at the 30 minutes, see where we're at. So we did not open with a gap. Settlement is here. Put that on your charts, 118.92. We opened with perhaps some longs. Those longs are finding what they're looking for. They've found some buyers that have moved price outside of Friday's range. We've got a naked point of control up here with which to check here. That's approximately 1928. We've got gaps up above. We've got naked points of control up above. This move was pretty substantial to the downside. This 120.20 weekly kickoff high is a previous weekly kickoff level that was at one point in the overnight somewhat important from Thursday into Friday night, or Wednesday into Thursday, and then we've seen the market kind of turn south well below that. So we're outside of range and value. We're testing up to point of control from Thursday. This is a market that is presenting with greater opportunity earlier in the session because we are out of range and value. But we could just go back into value from up here. Again, stay patient. Not really seeing anything that's jumping out at me in the euro, nor in the 10-year. All right, so we have rates slipped since the spike on FOMC day. They've been kind of coming off. It dipped below 1.3% last night, but it's now recovering back above 1.4%. This dip down below that 1.3% was obviously enough to take us to test last week's high, and we found rejection there. We got rejection at last week's high, and now rejection at weekly kickoff high. The market really kind of falling back into. This is such a. Oh, there go the charts again. This just kills me. And there they go again, and we're up. Okay, so the slow grind to the upside, just kind of holding on, but we're right in the middle of it. It's going to be another kind of a tough day. Not seeing great opportunity here. Nothing is really sticking out at me. We lost 5,500 in open interest off that low on Friday. Now we're heading the other direction, right back into that. There's just nothing that's really jumping out at me that's saying, hey, here's some fish. Here's some fish. Obviously, our overnight high, last week's high, we're back in range, back in value. No inventory, no runs, no hits, no errors, nobody left. Just kind of being patient, waiting for the market to give me or say, hey, look at this. It's cheap. Let's try that. I don't want to go searching for trades in any of these markets. And, we're back in value. I got to stay patient. Nothing tremendous for us in the euro or the 10-year. I think one of the more important markets this week is going to be the gold. I think we're going to see some decent opportunity in that. And as always, our equities. And you never know in crude. You never know in crude. So it's only Monday, man. We've got a whole week ahead of us. Make sure you take your time, keep your powder dry, look for the right opportunities, small risks, bigger rewards. Take your deep breath. Stay humble, grateful, and creative in your trading today. We are looking forward to an interesting and challenging week, as they all seem to be. We're coming into the holidays, into the summer markets here. Not seeing that we're gonna shrivel up and kind of go real slow here. I think there's a lot of opportunity this summer, a lot of unknowns, a lot of things going on. So keep your powder dry and be diligent because the opportunities are going to be coming for us. You see, what do we got to get into today? Well, we should see Dan for the market recap. I'm looking forward to seeing Dan. And let's get out there and profit. Trade well today. I'll talk to you tomorrow. Have a great one.